Hey guys, this is Nick from Financially Aware, and in this video I want to talk about the news that's all over the place that the market cap of Tesla has now surpassed Toyota as well as Exxon Mobil. And so these two companies are supposed to represent kind of the old dinosaur industry, and Tesla represents the new electrified cars and, clean everything and all of that. So in this video, I want to kind of compare Tesla to Toyota, actual numbers, and talk about why the whole idea that a lot of people have in their head, since most people buy stocks based on the story and not the actual numbers. And the typical story a lot of people have in their head about Tesla is something along the lines of, electric cars are going to take over the world in just a few years. Everybody's going to be driving them, and Tesla is so far ahead, and they're also kind of the luxury car brand, kind of like the Apple of cars. So not only are they so far ahead that no other car makers in the world are going to be able to compete with them, but also somehow miraculously people who could only afford $30,000 cars are somehow going to be buying $40,000, $50,000 electric cars from Tesla, or they're going to be able to lower their cars to sell more to the masses and all that kind of stuff, and their stock price is just going to keep going up from here and be the next $1 trillion company or something along those lines. That is a very exaggerated view of the reality of the situation. So let's start by just looking at some of the numbers of Tesla and Toyota. And just imagine you were just looking over these two companies and you didn't know much about them. You were just looking at them by the numbers. So first things first, Toyota sells 10.4 million cars a year, whereas Tesla sold about 360,000 cars last year in 2019. So Toyota sells about 30 times more cars than Tesla. Sales wise, Toyota's sales for 2019 are 281 billion, whereas Tesla's sales are 24.6 billion. So about 11, 12 times more sales than Tesla. And profit wise, Toyota had profits of about $20.5 billion on that 80 billion in sales, whereas Tesla lost about $860 million for 2019. Now, in the last few quarters, Tesla has actually started turning a small profit, so maybe they're done losing money, but they're not making money hand over fist by any means. So let's look at this. This is kind of interesting. If you take the amount of cars that Toyota sells and divide the sales number by the amount of cars, you get the average sales price of a Toyota as about $26,800. If you do the same for Tesla, you get a sales price of about $67,000, their average car. Okay, unless you live in Silicon Valley, not a lot of people can afford that kind of car. They're more of 26,000, that Toyota sells to 10 million people a year. And the profit on that average car for Toyota is about $2,000 per car. The profit for Tesla is a loss of about $2,300 per car. So that's a big difference. But even so, just looking at the Toyota, right? I mean, they're a global operation. They've been in business forever and stuff like that. But even so, on that 26,800, they're making about 2,000 That's about less than 8% on each car sold. So, and their PE is really low. It's like 7.5. So the auto business is not generally a high profit, high margin business. And once you start getting into large numbers like Toyota and Volkswagen and Ford and stuff like that, you're not, you're not going to be making these huge margins like Apple or something like that, even if the price of your car is 60,000, 70,000. You see, even at these prices, Tesla is still losing money at this point. So what's the significance of the high price of Tesla's cars, and why is that a hindrance? Because of this, it's that when an electric car is very far from the price of the average car in that country, they're going to have a hard time convincing people or having people find the money to come up with to go buy those electric cars. People, they shop based on the value they get for a car. So if a regular car is 20 grand and an electric car is 35, 40 grand, it's not justifiable in most people's minds. So let's take a look at the gap in prices between regular cars, gas and diesel, and electric cars in different countries. So the average retail price of cars in these countries, here they are. And in US and Canada, it's about 35,000. That's because most US and Canadians like to have bigger cars like SUVs, so that skews the number upwards. So looking in Europe, where the average price is 34,000, the cheapest electric car is like 35,000, then quickly goes to 43, 47, 67 for the Model 3, and 103,000 for the Jaguar I-Pace, right? So, I mean, yeah, 34 and 35, you're comparable to this small car, but after that, the comparisons go away when a Tesla is twice as much as the average car. No matter how few, how much more miles per gallon you get equivalent from a Tesla, it's not going to compare to pay double the price. And in the US and Canada here, you got the Leaf that's comparable, 32,000. The Model 3 is like 47,000. So it's a little closer, but it's not there yet. To get a real high electric car sales, the price of the car has to be equivalent in price or cheaper for the same equivalent kind of car. So even here, this Model 3 is a small car. The people that are buying the $35,000 cars are buying bigger cars, like maybe a RAV4, a Honda CR-V or something like that, or something even bigger. And the Model 3 is pretty small itself, so it's not really comparable. China, on the other hand, where the average regular car price is 26,000, they have a lot of electric cars that are 15, 18, 20, 32. So it makes sense for Chinese people to buy electric cars. It makes financial sense because they're cheaper than the average car. So that's part of the reason why the Chinese uptake of electric cars is much bigger than other countries, but that's not the whole reason. So here in this story in the Washington Post, they went and talked to some people that were charging their cars in China, and they talked to a few of these guys in the underground parking lot, and they said they were lukewarm about their Chinese brand electric vehicles. And they said the cruising power is not that good. With a full charge, it's supposed to go 400 kilometers, about 250 miles, but only goes 200 kilometers. So about 125 miles, complained this guy, and said that the battery on his one-year-old WM motor SUV had already started wearing down. And the other thing is, the reason why they buy a lot of electric cars in China is because the incentives. And so this guy said The reason he bought the car was only because electric vehicle buyers get a license plate right away in China. Earlier, he had to wait more than 6 months for a plate for a gasoline-powered car, a delaying tactic China is using to encourage electric purchases. So it's kind of, they're forcing you to buy electric cars, because if you don't, it's going to take you 6 months to get a license plate. And so there's also, you know, other incentives China has, money that you get off of the car if you buy an electric. But so even with that, he says he would not buy an electric car again. Okay, so yeah, there's a lot of electric cars in China, but even with that, it's only like 5% of the market. And even with all the subsidies and getting the plate and all that stuff, and these cars are not that good. The batteries don't last very long, and they don't go the certain range that they claim to. And not only that, but here's an article that talks about the second-hand market for electric cars in China. And just recently that Tesla's their resale in China is very good, 76 and 74% after 1 year. But from there, all these Chinese brands, the resale value drops off significantly, because these batteries, aren't that good apparently. But look, the next best car is only 47% of its value after 1 year. So it loses about 53% in 1 year. And that goes quickly down into the 30s and even the 20s. So not everybody is going to switch to electric cars overnight. You see here that until the cost of electric car is comparable to a gas car or cheaper, there's not much incentive for people to switch over that quickly. The batteries have to get a lot better, the prices have to come down, and yeah, some of that is coming soon, but it's not going to happen overnight. And the other thing is, with the price of oil dropping so much, that's a hindrance to people taking more electric cars, because Priuses and electric cars and stuff, they do better when gas prices are high. Now that gas prices are low, people are not that worried about the price of gas, so they don't care that much about electric cars. So even in the US, okay, a Toyota Corolla starts at about $20,000, and it's about the same size as a Toyota Prius, which starts, over $24,000. And the gas mileage is about, 12 miles per gallon better on the highway than the Corolla, right? So this is like the same car, but the Prius costs $4,000 more. When the price of gas is cheap, most people buy the Corolla, they don't buy the Prius, okay? And that's just a $4,000 difference in price. And yet people, can do the math and see that even if they drive 10, 15,000 miles a year, they'll never recoup the $4,000 difference in the savings on gasoline, especially when gas is $2, $3 a gallon. And it gets even, it even matters for Toyota as well, because look, you got this fuel cell electric vehicle, the Mirai, okay, which is about the same size as the Prius and the Corolla, yet cost about $60,000 and gets 67 miles, estimate highway and city, whatever. But are you really going to pay, 2.5 times a Corolla, or almost 3 times a Corolla, just to get, a little bit better gas mileage? It's not even double the gas mileage. You could get 2 Toyota Camry hybrids for that price. So I'm pretty sure that these Mirais aren't flying out the door when people have a Corolla or a Prius or even a Camry for much less than half price of a Mirai. So this is a look at the market share for plug-in light-duty vehicles by region. And you see China has 5%. Europe 3%, US 1.9%. So these ideas that, you know, in 5 years we're all going to be driving electric cars and all this stuff, that's a lot of pie in the sky, and it's, you know, it's being pushed by a lot of people, including Tesla, because that helps their stock. It's a little bit like before Uber had their IPO. They sold the story that, you know, in a few years they were going to get rid of all the drivers and all their cars would be driverless, and so they would be making a lot more money because they wouldn't have to pay the drivers and all that stuff. It's a nice story to get people excited about the stock, but it's not the reality. And if you read the prospectus for Uber, it said in the prospectus that the driverless cars were not going to happen anytime soon, and if they did happen, they would only be on a few certain routes during a certain time of the day, during a certain kind of, you know, weather condition or something. Really, you know, very few instances where that would actually happen. And so the idea that Teslas are going to take over the world and they're going to be self-driving all over the place, I don't know about you, but I see a lot of stories about these self-driving Teslas killing their occupants, crashing into things, even into police cars that are on the side of the road with their lights flashing and stuff like that. So you know, that technology is not exactly ready for prime time. And the idea that all the other car manufacturers are just going to sit still and let Tesla be the only, you know, seller of electric cars is just not going to happen, because the cars are basically just an electric motor and a battery. So and Tesla doesn't even, you know, make their own batteries, right? They do it in association with other companies. So everybody's going to have access to the batteries, and the motors are not that big a deal. So, I mean, what I'm getting at is the Tesla stock has gotten so ahead of itself because of this great story that everybody wants to believe, but the reality is a lot different, and it's going to take a long time for electric cars to get really a large market share of the US or even China at this point. That said, you know, Tesla went public in 2010 at $17, and now it's over $1,100. So, you know, they have that over Toyota for sure. Toyota's maybe only up 100% in the last 10 years. So the stock has definitely outperformed all the automakers and all that kind of stuff. And, you know, is it going to outperform in the future? Who knows? But it definitely has gotten way ahead of itself. And, you know, a few $100s ago, Tesla, Elon Musk said that the stock was overvalued. So what does he think about it now? I'll tell you what, the best thing Tesla could do right now is, unlike these companies that are buying back their stocks at the top of the market, if they could, they should be trying to do more secondary offerings of their stock at these elevated prices to shore up their cash for, you know, when the bad times hit. Kind of the opposite of what most other companies are doing. So that's my take on Tesla and how it compares to Toyota. And you see that, you know, this stuff is way overhyped, and all the stories you see about them taking over the electric car market and all that stuff is highly exaggerated, I think. I wouldn't put all your money in Tesla stock thinking that, you know, it's going to be the next Amazon or the next Apple or whatever, because the laws of large numbers are going to be in its way. And when you're a big manufacturer like that, you don't have a huge multiple on your earnings, and Tesla doesn't even have a full year of positive earnings yet. If you like this video, leave me a thumbs up for the YouTube algorithm, and leave me a comment and let me know on whether you think Tesla is overpriced here or not, and if you're thinking of buying the stock. And as always, subscribe to my channel if you haven't done so you don't miss any of my future videos. Thanks for watching.